I'm always running loads of different ideas and strategies just to make sure that these are working. But for my own portfolio, I put that what ones for me are performing the best overall and have been consistent. If it reaches that sort of max drawdown cutoff point, I'll pull it from the actual main portfolio and then put it in the small back burner account to make sure to see if anything changes going forward.
Sitting down today with Blayn Marshall. Blayn, good to have you on the podcast. You are a fund trader with Darwinex. You're managing capital, trading with algos primarily, but we'll talk about kind of your story and your background. So good to have you on the podcast. Good to sit down with you and discuss trading.
Yeah, thanks for having me on. Really excited.
Awesome. We got to go back in time. Tell me a bit more about kind of when did you come to trading in the first place?
Yeah, so I mean, my background initially was from like stock market from when I was like 18. My dad gave me a little bit of money and said, if you learn how to play the stock market, you'll retire early. So initially, when you're 18, I just kind of like overlooked it. You know, it was like, okay, yeah, fair enough. Done some like digging into certain stocks, and it was just more of a case of having fun, to be honest, to begin with, and seeing what there is. And no, I bought like a stock that I bought stocks that like resonate with me back then. I was into like gaming and stuff like that. So I think I bought a stock called Gfinity, and it like doubled. It went 100% in like a couple of days. And I didn't know what to do with it, to be honest. Like how, like, just like anything at the start, it's went 100%. I was like, do I cash out or what do I do? And I just ended up holding it. It crashed back to where it was and I sold out. So just break even at that point. I was like, right, okay, I need to figure like out a strategy, an exit strategy. So, you know, what I would then do is just pick stocks, and if they went up 20%, sell out, and that was okay. But it's very hard to keep picking winning stocks. So yeah, I'd done that for a couple of years to begin with. When I was at university, that's when I stumbled across trading. So my engineering degree, my dissertation was on wave forces on cylinder structures, and a way that you do like tests on that is computed fluid dynamic simulations, CFDs for short. And I clicked on the wrong article. I clicked on a contrast for difference article on Elliott wave theory, and yeah, from that point, just been hooked on trading. Just a mistake to begin with, and opened my first trading account. I was just trading the waves, only buying because I thought sell meant selling, not like short selling. And yeah, it done quite well until there was one day news was and wiped out all my gains, almost the whole account gone. And that was a crazy experience for me because I didn't have a stop loss on then or anything like that. Had no understanding of these sort of things. And yeah, done some of the basic retail things in terms of mistakes. So lost almost my whole account there. And from that point, just done loads of studying, research, reading books, podcasts, communities. And I was had like 3 mechanical strategies that kind of like I stuck with. And the problem was I was trading all around the clock, not really sleeping much, just continuously trading. So I needed to check the charts every 4 hours. And then I knew I needed to make a change. And from that point, I'm now into fully automated trading.
What made the change for you between different strategies, kind of strategy jumping and then sticking to one thing and kind of going with that one thing?
To be honest, it was a case of just kind of I was strategy hopping because I felt like some of the strategies weren't resonating with me as like the way that I wanted to trade. And then when I got to the strategy, the main strategy I was trading is you only check the 4-hour chart. So I was only checking every 4 hours, which meant there was a lot more structure to me. But you know, it was all well and good, but having to get up at 2 a.m. to check the charts was a bit of a nightmare, and doing that for just over 2 years was quite painful. So that's why I then was like, okay, how can I essentially what can I do so that I can get my sleep back and my life back essentially? And then that's when I done research into automated trading, done a couple of courses, and now yeah, just fully automated.
Was algo trading easy for you to start with, or was it kind of difficult to let things go and let the algo do the work?
No, it was very difficult to begin with because it's a completely new subject. I think like lots of people are kind of like scared of maybe like because it's quite complex and you've got to learn code and things like that. That's probably like the big hurdle. But once you can, once you dive in, get over that hurdle, just like anything, you get used to it, you pick it up, and then you just adapt and get better and better and better and continuously build on that idea. So that's probably the hardest part, just starting. But once you're in there, build a couple of simple things and then build on it from there.
When did you realize that your algos were actually working, like it was profitable? Was it like a few months after or a year after, or when you kind of realized that?
Yeah. So like I build one algo at a time and put it on, say, a small amount of capital and run it for, say, 3 or 4 months. And what I would do is reflect on what the results were getting and then running a back test in the background month on month, just to make sure that they were in line with the performance of what I'm getting. Because there's some of the things that you can find is you can get a perfect back test, but as soon as you apply it to the live market, the opposite happens. So that was the way that I would construct it. Like I'd really watch to make sure that it's in line with what's going on. It's pretty simple to build a perfect back test, and then you'll go trade it live and it collapses. So just keeping that sort of like strict management to making sure that we're in line with each other. Now, don't get me wrong, there was a couple of bad ones in there as well, naturally, that you just put straight in the bin. But if everything was going well, then what I was doing is scaling up the accounts and continuously letting them grow, and then working on the next strategy, doing the exact same, just a rinse and repeat method.
How did you come up with the strategies you used for the algos? Was it based on something you found online, or just you having ideas, or?
A mixture of everything, to be honest. Like, when you spend so much time looking at charts, you pick up your own sort of like theories on chart patterns or the way that like certain characteristics of currencies move, but also using every single online source possible. You can pull strategies from YouTube, albeit most will probably be not very good. But you can still pull a lot of these strategies, test them, and yeah, research papers, books, and there's been a couple of people on your channel before that I've went onto their websites and got ideas from strategies from that. So there's an abundance of resources out there that you can just pull ideas from.
I know, especially with the algo trading, you can go like very in depth. Like you can go and like do a bunch of data analysis. You can really kind of go crazy with it. How far in depth did you go on it? Did you really kind of do all the tests and stuff, or did you just take it more simply in the beginning?
In the beginning, I was because there was such a learning curve into building complexity. I just tried to find the simplest strategies first, build them, test them, run them, and then as you grow in the algorithmic space in terms of like learning and developing, then you can start adding a lot more complexity in. But one of the most interesting things that I've found is some of the simple systems have actually been some of the better systems over the longer run. I feel like the more complex, more, let's say, filters that you add to it, the more that you really cherry pick and essentially over optimize is the problem. So keeping it simple is actually very good.
If you are enjoying this interview so far, then I think you'll like this one over here. I've been working on this book for a long time called Prop Trading Secrets. It's finally out. You can get it in your favorite bookstore or on Amazon, Barnes & Nobles, of course. And this book is really about interviewing traders who are successful in either trading for prop firms or managing their own private fund. We talk about their background, what makes them successful, the things they went through, struggles they had to go through to become good traders now, and a lot of the good wisdom that you might not necessarily hear about, but it's all into a condensed version over here. You can read through these stories, get inspired, of course, learn a lot about what they do, their strategy as well. And we summarize everything at the end where we have a whole chapter of summaries of what these traders have in common. So if you want to check it out, 14 traders in this book that myself and Kathy Lean interviewed. There's a lot of good wisdom in this. If you like these interviews on YouTube, I'm sure you like this one for sure. Go grab it. Like I said, it's on Amazon, Barnes & Noble, it's on Audible in audio version. All the other audiobook platforms will have it too, or your favorite bookstore. So check it out. If you did read it, let me know in the comment section below which one is your favorite chapter, and we'll get back to the interview. Now, tell me, fast forward to today, you're funded with Darwinex and a few other investors. You're managing over 30 strategies. You definitely build a lot from that point. Tell me, how did you build all of this?
Yeah, I mean, what I was doing is building one strategy at a time, and what I do is run them all individually. And then it's where, as you develop, I read into sort of like portfolio management and portfolio development. So what I then done is I had an idea of, okay, where can I actually get capital from? And there's a few places, but Darwinex was like the one that stood out to me. So at that point, I was like, right, let's create a portfolio of my best strategies all together and trade it on there to see if I can get capital. And that's essentially what's happened. But putting a lot of these strategies together, you need to analyze it like a quant trader essentially. So you're putting into. So I use Quant Analyzer, and I'll put all these strategies together to make sure that they're not make sure they're not correlated, they're uncorrelated, and then build it out from there and try and build a robust strategy that is good for the long term.
When did you decide to look for capital and get funded?
So one of the things that was happening was I was building so many strategies. I was running out of capital myself to actually apply these strategies to run effectively. So trying to find external capital definitely helps you also grow the portfolios out. You can build and test more and just keep growing in that aspect.
How much capital did you first get? Was it from Darwinex or from an investor, or how did that happen?
So it was first from Darwinex, and as naturally you progress in Darwinex and you've got that track record up there, I did start getting messages and connecting with outside investors and finding a way of being able to trade out with Darwinex as well that I can then support them personally and also try and build new things with them as well.
Tell me about the mindset of that capital. Do you feel like it's more pressured than when you were trading by yourself with your own money, or is it kind of the same, or how do you see this?
I mean, initially it was challenging mentally, but I think this is where definitely years of trading, building up that stronger mindset, definitely helps because initially it was quite daunting, but at the end of the day, if you've got the data, you're doing really well and successful. One of the things that I do is I use such like a low risk approach, but go for like, so because I've been training so many strategies, I use like a low risk approach. So every given day, there's not too much in terms of like volatility within the account or balance. So it doesn't really phase me too much at all, just for the fact that I keep it such a low risk approach, meaning that like I can make good decisions with a clear head. So initially, yeah, it was challenging, but now it's just part of the everyday.
Tell me about the process that you took from going from that first funding to then seven figures eventually. How did you kind of make this happen? Was it all connection, or was it something else?
And so it's partly between Darwinex and building connections within the trading space, connecting with other traders that are also good. Everybody knows somebody. And if you're doing really well and you can give that, you can get lots of opportunities that way.
How do you build these connections? Because like for the new traders, kind of tough to see themselves trying to connect with other traders. They have no value to add. They don't know how to reach out. Like, how did you connect with people that are higher at the higher level than you?
It was just naturally, messaging people, you just message people, reach out, and just naturally connect on that sort of level. It sounds crazy, but like, I think people put in the perspective that people are above them. But at the end of the day, we're all the same. It's easy to just reach out and speak to someone. If you do it across quite a lot of people, yeah, most of them might not reply, but you will get a couple that reply. And as long as you've got something to kind of back yourself up to show that, it's worth their time, sort of to like, speak and spend time with you, then that's definitely helps.
That's a good point for sure. Definitely, I think connection makes such a big part of trading success too. Like the not just the strategy aspect, but like the opportunities you have eventually and the things you can achieve. So definitely, it's a good thing that you doing this for sure.
Definitely. I mean, to begin with, I had no connections. It's not as if I could go down the street and I knew like a bunch of people that would give me money essentially to trade. But no, it's hard to begin with. But just speaking to people, you start getting in the rhythm of just reaching out, which definitely should always reach out to people.
Have you had any mentors along the way, or did you mostly learn all of this by yourself through the internet?
Yeah, so like I've joined like a couple of courses to get me started in algorithmic trading, and that definitely helped a lot. So you would say that it would be sort of like mentorship in a way, but kind of gone off in my own as well. Like once you learn the basics of building some systems um, with algorithms, then you can kind of just go your own sort of like direction. And yeah, it's just about finding trading papers, testing the ideas, and building it that way.
Is there anything you see you found out was like more difficult than you thought, or anything that you like maybe you see online is like really flashy, like really easy stuff, but then in reality, there's some things that you kind of have to deal with or that are more difficult.
I mean, like, I think the hardest part is making the decision to actually dive into the algorithmic trading because it is daunting. And one thing that I would say is most people are like, you see these things online where like 100% gains and everything like that. And, as you say, like there is the flashiness of coming into trading. And I would say it's so far from the truth, essentially, if you want to be in this game for the long run. And building, one thing that I think is just not spoken about or taught about is how important it is to sort of like build a portfolio. Not just rely on one strategy. You see people online, like basically once you're profitable, you're profitable. Wow. I can tell you that some of the algorithms that I've built look good for like 10 years and they fall off. So it just shows you that edge erosion is real, and nobody's really taught that, essentially, I would say, in the retail space.
Yeah, it's a good point. Walk me through how you would set up a portfolio. Like what things you look at. Do you look at specific strategies and compare the results together and kind of build a portfolio that way, or is there something else you kind of look into?
Yeah. So when I build like strategies, I'll put them into Quant Analyzer. And what I do is I look at the correlation between all these individual strategies. And the aim is to build an uncorrelated portfolio. You could build 10 strategies on dollar related things, and there is going to be a higher correlation there, which might look good in the back test. But when it comes to like the live situation, there can be individual days where you are overexposed on one side of the market. So what I'm trying to do is put these systems together, make sure they're uncorrelated to, yeah, it's just all about uncorrelation, building uncorrelated portfolios for me. So put them in Quant Analyzer, analyze them. If they're good, then combine them together and then keep doing that until you've got what I would regard as a good balanced portfolio that trades multiple assets, both long and short, and, breakouts, trend following. And yeah, that's what I focus on.
What happens when you have like 30 strategies? So do you keep building new ones, or do you kind of only look at the ones you have now, or are there some that are phasing out and you have to add new ones to the portfolio?
Yeah, so for my main portfolio, like I've kept it pretty much the same for like the past year and a half. I've really changed like two strategies out and brought new ones in. But on the background, like I run like loads of different ones, just sort of like you would say, like in the background running, just in case that I need to bring them into play at any point. So I could have anything like I've got about 30 running in the background just in case I like one of the main ones. Let's say, is it performing as well? Then I can pull that out and put a new one in. So I'm always running loads of different ideas and strategies, just to make sure that these are working. But for my own portfolio, I put that what ones for me are performing the best overall and have been consistent. If one starts like fading off, or let's say I have like a metric for like a max drawdown as such, if it reaches that sort of max drawdown cutoff point, I'll pull it from the actual main portfolio and then put it in the small back burner account to make sure to see if anything changes going forward. Is it just a new equity drawdown for that strategy? Is it going to perform after that? Or has that edge for that strategy completely disappeared in this current market?
What happens on days where the market is just like really volatile, like especially these days, we have a lot of announcements, we have things that come up unexpectedly. Do the strategies take a hit, or do they kind of keep running and don't really have any difference there?
It all depends on the individual strategy. Like some of mine are performing great, some are struggling with it. But the whole point is you build these strategies so when volatility or times like this come into play, it can handle it. And I think one of the main things for me is if you run like a low drawdown, some of these strategies are running like 0.05% risk, which sounds crazy to most people. But what it means is in difficult times, if it's going through hard times and it's struggling for a period, it's not going through a crazy drawdown. It can take a lot of punches before it needs to be taken out the portfolio as such. So I'm not too bothered when there's times like this. If there's always going to be good periods and bad periods for any strategy. That's why I'm building portfolios. So then they kind of, some of them are performing well, some of them are not. But overall, as long as the equity curve is going to the top right corner, I'm happy with it.
Do these strategies all have the same risk per trade, or how do you figure out the exact risk per trade to put on strategy?
So for me, it all depends on how many systems am I running on that individual sort of like, let's say it's dollar yen. If I've got 3 strategies running, then they'll all be sort of like different risk depending on how many trades it's taken over, like, let's say 10 years. So for example, let's say for 10 years, it took 1,000 trades, one strategy, and then other strategies take 500 trades. I would risk more on the one that's tipped 500 trades. So let's say I'm risking 0.1 on that one. And then the one that takes 1,000 trades, I'm taking 0.05% risk. So then net, each individual sort of like position is risked adjustedly.
Tell me what comes next. Once you have capital, you're funded with, like you said, 7-figure or more now. Where do you want to take this next, and kind of what's the motivation to go further?
My main objective right now is just to scale, but also build other sort of portfolios that are completely different. And just see how far I can take it. If I'm constantly building systems, I've constantly got ideas that are working. It means that hopefully I'm in this game for as long as possible. So it's just about scaling, building, and just continuing the same sort of like momentum and philosophy that I've got right now.
Tell me what people can connect with you or find out more about what you do these days after this podcast.
Yeah, so they can find me on my website, which is just blaynmarshall.com. Or I am on YouTube now, Blayn Trades, and I'm doing something pretty crazy right now, which is a bit mad. But I'm building a portfolio on Darwinex Zero of 100 algorithms to see what happens. It could be an interesting experiment. Something. Let's see what happens with it. I mean, it's more of like a fun series of just to see how crazy can trading get with 100 systems run at one time.
Awesome. I'll be curious to see that. We'll put a link below for that. People can check it out. Connect with you on YouTube and on social media as well. And we'll put your Darwinex link below as well, so people can check it out. I appreciate your time here, Blayn. It's been cool to talk with you. Cool to see what you're doing and how you got success in trading in the past few years.
Yeah. Well, thanks for having me on anyway.